We've got a very special guest joining us on the show. Partner at True North, Divya Sehgal is here. There's a lot of development at True North. Not only have they booked some profit in one of their very interesting positions as far as their portfolio is concerned, which is Policy Bazaar. Everybody is watching for news flow, and of course it's getting IPO ready and ready for D Street. But Divya, the other financial of your portfolio got listed, Home First Finance. So there's a lot of news flow there. Talk to us about this transaction which you have recently conducted, selling a chunk of Policy Bazaar. You've been holding it for a couple of years. Talk to us about your experience so far and the roadmap you see in that position, which makes you hold back some of the part of that.
Thank you, Ajay, for hosting us. You're right, we have partially exited, and the keyword there is partially. I think, we've actually invested in Policy Bazaar, and we are a huge supporter of the firm. And at least the way we've seen the firm grow over the past 14 years, and the journey they've made to where today I believe that they've become a mainstream player in the entire insurance industry, and now increasingly so on the lending space also. So what we've done is we had invested from one of our funds, and which reflects our overall a partial position. We have exited a little bit. That's more from a portfolio construct that we needed to do some of that. The platform continues to perform very strongly. And we've been able to attract some high quality investors as we've done that secondary. On a go forward basis, I do anticipate the company having a strong growth trajectory. In fact, today from an ecosystem perspective, they are working with 90% plus of the insurers, and they have a very direct B2C customer relationship. So it has a very strong value proposition as one, a marketplace, two, as somebody who's building exclusive products along with insurers and also with reinsurers. So they are sort of deepening their footprint. They're not just staying at the marketing and the sales layer. So I do believe that Policy Bazaar has a very strong and rosy future. Thank you.
That's good to know. But what do you make of the argument of growth versus profitability versus valuation, which the entire ecosystem of investments, not only the startup and the VCPE community, which you represent, but even the listed side as well, talks about how to look at a company in the light of these three parameters: growth, tailwinds, valuations, and of course the kind of profitability outlook does it hold. On these three, where does it stand right now? Not asking for any specific numbers, but roughly, where do you see Policy Bazaar stand in that, in these three metrics?
It's a good question. If you look at it, any business starts from customer value proposition to revenue, to margins, and then profitability. And of course, growth helps it along the way. So if you look at it over the past more than a decade, I think Policy Bazaar has very strongly established its customer value proposition. Thereafter, for many years, I would say it has been sort of earning a very strong revenue flow, which has been growing quite strongly. And then margins are also something that can be seen very easily on the platform. So from a life cycle curve perspective, I would say among the consumer internet emerging companies in the last 10 years, one, Policy Bazaar has clearly established a dominant position in the web aggregator space, where it has 90% plus. Effectively, there is no other player. Second, it's very capital efficient. If you look at the amount of capital that Policy Bazaar has invested to reach this stage, it would be one of the lowest among those in the consumer internet space. And then three, if you look at the future growth potential that the platform has, it is very strong. And along with all of that, to your point, the margins are also trending fairly well. So from that overall perspective, the company is going through a strong life cycle and continues to move along that.
Right. Let's move on and talk about the listed one which recently got to the D Street. I'm talking about Home First Finance. You've built that business for long, and now, of course, it's part of the listed ecosystem as well. Talk to us about the outlook here and the size of the opportunity this company has the potential to exploit going forward.
Thank you. Like in Policy Bazaar, we invested in Home First also close to 4 years ago. And we, at that point of time, had bought close to us and another co-investor of ours had bought close to 74% position. Since then, we've been anchor shareholders. And Manoj, the founder, and the business team have been sort of continuing to build on their vision of creating the most admired affordable housing finance company in the country. Right. So how are they different? I think what they're trying to do is that they're trying to bring housing finance to the underbanked. To the people who, earn a certain, either they are self-employed or if they are salaried, their salaries are below a certain level, which many of the traditional home lenders do not get to. And that's a segment, as you can expect, that segment is growing quite rapidly. I would think that segment is already 1.5 to 2 lakh crores. Close to that and growing at a fairly rapid clip. So this is really working with the Bharat, right? Part of our country and solving the financing equation for them so that they can own their home. So the organization's been doing quite well. In fact, when we came in, it was around 800 crores. The numbers that I'm talking about are in the listed space. The business had grown close to more than 4 times, by last year, March 20, and continues, its trajectory through the challenging COVID times. I do believe that the opportunity set going forward continues to be very large. The business, as you can guess, is still a small cap business and has a lot of growth potential ahead of it.
One of your portfolio companies, Magma FinCorp, got acquired by a very interesting investor, Adar Poonawalla, Serum Institute, I think. Talk to us about this entire NBFC space and the kind of consolidation some of the players are looking, either willfully or induced by the environment. What are your thoughts there?
I think the entire lending space, more specifically the non-bank lenders, have fundamentally undergone a change over the past 4 to 5 years. So if you look at it, what has been the historical reason for existence for a non-bank lender? The idea is that banks cannot get everywhere. And second is that there is always a large underbanked segment, and can non-bank lenders reach out to those segments? The benefit to the banking system and the overall ecosystem being that non-bank lenders provide a certain degree of further equity cushion as they reach the underbanked, right? And as they potentially write a slightly higher risk than what the banks would write. I think, as some of the, that entire industry has been growing over the past 40 years, what had happened sometime earlier part of last decade is that the wholesale business model had sort of overtaken the retail part in certain non-lending platforms. And along with that, because of easy liquidity, certain ALM mismatches had got built up. I think obviously the ILFS and what happened post that is well understood. But that we believe is a structural change that's happened in the non-bank lending space. And therefore, people who continue to be in the wholesale lending will have to obviously watch for the ALM mismatch more carefully and solve for that. And people who had fairly large mismatches have obviously struggled to get out of that. Now, as we go forward and see, we do believe that either the scaled up non-bank lenders, or the ones which are smaller, if they are more retail heavy, are the ones which will continue to have a rosy future and a positive outlook.
Divya, talk about the outlook as far as IDFC Bank is concerned. IDFC First Bank, great leadership over there. They've successfully raised funds, adequately capitalized, very dynamic management. But risks on the horizon also loom, like delayed recovery in the economy, especially at the margin, where is their target audiences. What are your thoughts there?
Ajay, that's a tough question. I'll hesitate to directly answer the question on IDFC, but what I will answer is that without doubt, there are certain asset segments in the country post-COVID which have shown improving collection efficiencies and are coming back to normalcy as we speak. Right, and they are the better run lenders. Effectively, COVID has been a test on everybody's retail and corporate lending book. And the ones who are coming out better off at the other end of COVID, I think that in itself shows some sort of an Agni Pariksha that many of them have gone through. That is one. And second, the ones which are obviously have raised or have their capital positions fairly bolstered. So to that extent, like you were referring on the non-bank lending space, I do believe when you look at both banking and non-bank together, right, clearly market share is moving towards the better capitalized and the stronger players. And I think that movement of market share will continue as we move forward.
Divya, very quickly, Max Bupa is also one of your companies, and insurance as a space is on fire. Up till now, it was a push product, but unfortunately, because of the environment, people do realize its importance. All kinds of insurance actually is taking a demand come back.
Yes. No, very true. Obviously, you rightly said that to some extent, while health insurance, I do believe is a necessity for every family, but it was a push product. We are a young country. Right or wrong, and of course, very unfortunately, the pandemic broke out. But the good news is that many insurers like Max Bupa have stepped up. So, for example, we've paid more than 200 crores of claims. Of course, we are one of the COVID-related claims over the past few months, and we continue to pay. Now, what that has also led to is that a lot of people have increased and do believe that health insurance is one of their mandatory investments in their overall portfolio. And to that extent, the industry is also seeing potential and tailwind. So, for example, Max Bupa this year would have grown close to 35 to 40%. On their and the journey for its growth continues. And these are obviously the standalone health insurers like Max Bupa. That part has seen faster growth, partly because of the risk that people have perceived on the health side over the past 12 to 15 months.
Right. All right, Divya, really appreciate your inputs on all these companies spoken about. Good wishes going forward for your portfolio as well. Stay safe.